Hey everybody, morning. How's it going? And welcome back to the show. Welcome back. Welcome back. Got another day, getting a little bounce, especially in Bitcoin. Holy moly. Holy guacamole. What a flush out. Didn't really expect it to go that far down, but hey, we still got more to go if we're going to make the bottom immediately. Now, I'd prefer to just go on down to like 30 to $50,000 area, and we could call this correction wrapped up and we could go higher. That would be beautiful, right? Absolutely beautiful. I would love that. Just get it over with. Rip the band-aid. Let's move on. That's what I'm talking about. So that would be, I don't know what you would say, like the best case scenario. Now, I got something that might bum you out a little bit to talk about today. See, I try to cut through the fluff. David, I know you're gonna be shocked about this. Um, I know this might be shocking to some of you. Some of you may have read this. Some of you may have seen some of this out there. But you know that feeling when you buy something you've been saving for, you know, that car that you can finally call your own, or whatever it is, you get the title. It has your name on it. It's yours. It's paid off. You can paint it, you can modify it, you can crash it if you want to, you can put it in the shredder, you can throw it away. I mean, it's your property. You can do whatever it is you want to do with it. Now, what if I told you that when you have stocks, those stocks that you own in your brokerage account, you don't actually own anything the same way? What if I told you that you're basically leasing them from a giant faceless entity that you've probably never even heard of? So buckle up, because today we're going to pull back the curtain. We can ignore the man behind the curtain a little bit in the biggest shell game in finance. And it turns out you probably don't own anything in the way that you think you do. And the implications here, especially if things go south in a massive way all at once, well, let's just say we're not in the catbird seat to be taken care of. So you log into your brokerage account. You see your shares of Apple, Tesla, whatever meme stock you bought yesterday that you planned on taking a rocket ship to the moon. It says you own them. Your name's right there on the account. Your account number shows it right there in the thing. Your brokerage, says, you own them. But legally, that's not the whole story. Like, that's not the case. Most of our stocks are actually held in what's called a street name. This means that your broker is the registered owner on the company's books. And your stock is just some in their account. And they have an account, they just kind of mark down which account it goes to. But it gets even weirder than just that. Your broker doesn't even actually hold anything directly. They actually just have an earmark at a place called the Depository Trust Company. It's another company. It's not even like a government entity here. The DTC. And the actual legal owner of record for the vast majority of all publicly traded securities out there in the United States is a company called Cede Company. That's CEDE and Company. This gets sketchy. Cede Company. Now, sounds kind of like a law firm from a Dickens novel or something, doesn't it? I mean, this is the actual company that owns your stock. You are just a contractual beneficial owner, and you have a claim to the stock, but it's kind of like an IOU. It's like you paid for a house, but the deed is in somebody else's name, and they're just letting you live there for now for the mutual benefit. Now, for decades, this system has been working just fine. It's been efficient. It makes trading fast. It makes it easy. We don't have to swap around paper certificates, and it, with the speed of everything moving around, it works for the digital convenience. But we've also traded away our direct property rights to the stock in the process. And here's where my sarcasm probably gets thicker than mud on a... I mean, this system is designed to protect the big players, not us. This is designed to actually protect not even the brokerages, but the underwriting banks, not any kind of shareholder at all. There's actually a law, Article 8 of the Uniform Commercial Code. It's been adopted and amended by every state in the United States, all 50 of them, that says your broker can't just treat your securities as their own property. Sounds great, right? Except when you read the fine print in this clause, the fine print says that your broker pledges your securities as collateral if they do that, which they're actually allowed to do, and they go bankrupt. The lender to your brokerage account gets first dibs on your assets, on your shares. Let me repeat that for you. Your broker can use your stock to get a loan, and if they do something stupid and go belly up, their creditor gets paid back with your shares and your money before you do, even if the broker was doing something less than legal. And this is not a bug. This is a feature. This was written into the code. And don't think this is some kind of crazy theoretical risk. You remember in 2008 when Lehman Brothers collapsed? They had been improperly using customer assets as collateral. Their customers, the beneficial owners, had their assets frozen for 5 years while the banks kind of sorted out who was going to get what and who was going to be left with what. Similar stories with MF Global and Central Management. You know, people who thought they owned investments were actually locked out of their own money for years. But hold on a minute, you say. What about this insurance that they talk about, the SIPC brokerage insurance, right? It's kind of like the FDIC for stock brokerage companies. The SIPC protects you up to $500,000. That sounds like a lot, but the entire SIPC reserve fund is less than $5 billion. There's actually tens of trillions of dollars of stocks and assets in U.S. brokerage accounts across the country. This is not an umbrella for a rainy day. That's a cocktail umbrella in a Category 5 hurricane type thing. If things went south in a big way across several brokers, the SIPC is not going to be able to cover it. The SIPC was designed for a single small brokerage company failing, not one of the big guys, and not a systemic crisis where bigger dominoes start to come apart. So what's the move? I mean, do we all panic, get out of the market, stuff our cash under the mattress? Of course not. You know, we're savvy traders. We look for opportunities. You know, first, you can truly own your stocks. It's called a direct registration system, or DRS. You can instruct your broker to directly register your shares in your name with the company's transfer agent. And then you're actually the legal owner, not Cede Co. No broker shenanigans. You get the annual reports, you get the dividend, you get everything straight from the company. The trade-off, well, you can't just click a button and sell your shares anymore. Kind of slows down your whole trading activity. But for long-term core holdings, if you plan on holding these shares for the long term, this might be the thing you want to do. It's kind of the financial equivalent of having a deed to your house in your own name and having it locked up and on the register. You know, register of deeds, everybody knows it's all you. And this brings us to the investment opportunity here. Who handles all this direct registration? There's companies out there called transfer agents. And the biggest one in the world, the undisputed king of transfer agents, is a company called Computershare. They trade on the Australian Stock Exchange under the ticker CPU.AX. Interesting, right? Interesting. As more and more investors wake up to this ownership shell game, and in the GameStop saga that we saw 4, 5, 6 years ago now, the demand for direct registration started skyrocketing. Computershare is the company that benefits directly from this trend. They're the plumbers of the financial system, and right now, a lot of people are realizing that they might need a plumber. It's kind of a fascinating parallel to the crypto world's mantra. Not your keys, not your coin, not your wallet, not your not your coin. If you don't hold private keys to your Bitcoin, you're trusting exchange in Bitcoin or Ethereum. And we've seen how that goes. We've seen multiple brokerages go out of business every cycle. There's rumblings that Binance might be stumbling a little bit in this big Bitcoin's, not just Bitcoin, I guess, in this big crypto flush out that we've had the last couple of weeks. Binance, the biggest brokerage in the world, might be having a little bit of trouble. They stopped withdrawals yesterday. And, you know, it could be years before people saw their crypto. Same principle with stocks. If your name isn't on the books, you're trusting your brokerage. That new Bitcoin ETF, all of them, they're great examples of this. You get exposure to the price, but you don't own any Bitcoin. Coinbase is the custodian for most of them. And it's kind of the same structure, just with a new asset in crypto. I mean, it's kind of like you look at stocks, and it's very parallel to how the Bitcoin ETFs work. You have maybe a claim to some Bitcoin, but some of those ETFs don't even have a redemption mechanism where you could get the Bitcoin if you wanted to. So the takeaway today, understand the difference between convenience and actual ownership. If owning the stock is part of your core like investment strategy, for like, I'm going to own these shares forever, I'm going to whatever, you need to get your true ownership in order. Take a look at the biggest player in the space where transfers and stuff happen. I mean, Computershare. I mean, it's your money. It's your risk. If you have stuff that you really want to hold in case of something bad going down in the market, make sure you cover your butt. That's it for the monologue today. Let's jump into where we might make some money. So, anyway, there are ways around it, but it is kind of sketchy. Sketchy system out there, and it's all set up to protect the bigger banks that loan to the brokerage companies. It doesn't protect any of us. So, don't mean to be a bummer. So, I want to address something before we get started too far down the road here today. Next week, Monday, Tuesday, Wednesday, I will be traveling. I have an in-person event I guess Sunday I'll be traveling. Monday, Tuesday, I will be in Jacksonville for an in-person event with 4 other gurus. And I guess we're going to have a good time. It's for the all-access members, like Term Market Trading Lab members and Diamond Club members of other gurus. It is a 5-guru event, so it's not just me. I'm going to try to do this normal show. In fact, they want me to do my normal show, but they're going to have the conference going on at the same time, so I have to go back to my hotel room and try to do this. So I'm going to do my best to put on the show as normal. The morning show, the 30 Minutes of Awesome show on Tuesday. Yeah, I'll try to have the morning show Monday, Tuesday, Wednesday. If something happens and I'm not here, if I'll get disconnected, if, there's all sorts of things that happen when I don't have my home setup. I just wanted you to be aware. I'll do my best to provide the content I always do, but I can't make any like giant promises that the show's going to go on no matter what. So there could be hiccups, and yeah, be careful. So I'll do my best. I may not be taking any trades. If you're in services, the fulfillment may be supposed to go on as planned, but anytime I'm not here, problems can happen. If the bots go down, there's nobody to put them back up because I won't be here to fix them. So I'll do what I can. All right? Do what I can. So just want to throw that out there. And all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, future cryptos. If you desire personal financial advice, you can hire somebody, but I'm just a dude on YouTube. I make some money in the market. Some money. I do all right. I mean, this is one account. I have like 20 accounts. This is one account. This is a larger account of mine. So far, reload, refresh. The 1 year performance, $64,000. Not a bad year so far. Pretty good shake. There's the profit loss curve. Where's the big losses? Well, there's the biggest ones right there. Drawdowns. So this is real. Like, this is verified. 100% verified trades. This is my Robinhood account that gets uploaded to KInfo every day. Right here. Right here. So there's the P&L. The trades posted in here as I take them, as I close them. Posted for you. Right there. It's all audited, all verified. So when you watch somebody, do they actually make some money? What other guru shows you this stuff? I don't know of very many. I know of a couple, but I don't know of very many. And you look down here, my current rank for the year, 137th on KInfo. There's thousands of people on KInfo. I'm ranked 137th with $64,000 in profit. It's not so easy to make money in the market. Look, my 1 month performance, 101st. So holding my own about 100th place, no matter the month or the year. Check out the 3 month. I'm actually 71st. That's pretty good. So I'm among the top traders on KInfo, top 100. It's difficult to make money in the market. Very difficult. 90% of people lose money in the market. So make sure you're following somebody that actually makes some money in the market. Be careful out there. If your guru that you follow is not showing you, I mean, guru, I'm just a guy, you know. They call us gurus, I guess, about the market. But if the person you follow doesn't show you their trades and show you an audited record like that, why are you following them? I mean, let's be honest. Let's be honest. So S&P came down to about halfway to the roadmap line. So this concerns me a little bit here. We rally back up, bounce off of this 618. We could easily take a trip back down here. Easily. You know, we found support at the 4 hour. Hadn't really been down there since back here in November. We bounce up off of this 618 zone in here, and it's actually the whole blue zone. We bounce off of that zone. That could take us down to the daily roadmap line down here. And that's on the cash index for S&P. Cash index for NASDAQ actually touched. We actually made it down there. I've been warning about the fact that we might take a trip down there. Guess what we did? It's right there. Boom, shakalaka. Boom, shakalaka, laka, laka. Beautiful, 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 beautiful. So look at the S&P overnight. Let's see, is it the... Yeah, we're coming up into the 30-minute. We're not quite there yet. We're right in the 15-minute. We touched the 15-minute back there on Wednesday and flushed on out yesterday. Made Made the lows overnight. This lowest low right here was after the market closed. It was after the market reopened for the day. That's at 7:30 at night Eastern time, right there. We've rallied back up to the 15-minute. Now, same kind of situation as the cash index here. Flip back up to the bigger time frame here, and we're well below the 4-hour on the futures. This right now is just one big 3-wave type move. If we rally back up into that 4-hour resistance at the 4-hour roadmap line, this can set us up for another swing lower. It's just big picture pathway. Coming up at the end of the show here today, I'll go through the gamma exposure, look at the options for S&P and NASDAQ, well, for SPY and QQQ, and kind of give you my expectation for the day. So if that's important to you, hang around to the end or come check back later after we wrap up if you got something else you got to do. NASDAQ, same kind of situation here. 3-wave move down. The 3rd wave was kind of spicy and could develop into something bigger. So on the futures, we actually fully went through. And after that reopen last night, we fully pushed down through the roadmap line on the futures. And now we're reversing a little bit. So we could get a little bit of a spicy bounce day going here today, if this can get some legs. If, being operative word, if. And like I said, we'll take a look at the gamma exposure. But this would be back up to 25,500 on the NASDAQ futures. Index itself here, cash index, we'd be looking at a move back up to around 25, about the same, 25.5. So 25.5 across both of them. The difference between them is not ginormous. And Q1 exclamation point. And it's about 200 points, looks like. Well, about 100 points difference between them. In Q1, I should have done in Q1 exclamation point first and subtract off NDX because they're in, it's not in backwardation, it's in contango. So yeah, there you can kind of see the daily difference between them. And these big candles down here, because my NASDAQ feed runs 15 minutes behind the cash index. So it's only accurate at the close. But roughly the line between the green and the red is the difference between them. So right now we're running roughly 95 points. 95 points difference. Look at the Russell. Look at that. We came right down to my level there. That was the Head and Shoulders playing out right there. That was actually the Head and Shoulders playing out in full. If we can hold on to that, going higher, that target up there about 3,100. If we get below this level, probably coming down to the roadmap line, down around 2,400. That's a pretty big difference there. Big, wide difference. But this correction for Russell could be done. If you're felt a little spicy on this thing, you can go out a few months, maybe out to June. Play a call spread, looking for that 3,100 on IWM. IWM would look something like this. That level gonna be up here at 305. So you can play something spicy, something like a, I don't know, 275, 300, 25 wide out to June. Looking for that pop up there. Why out to June? Because might take a few months to get up there. If S&P keeps grinding it out, could be a problem for Russell immediately pressing higher. So you jump out to like June, you're looking at something like a 275, maybe a 300, something like that. Could, you know, it's not cheap, 600, but 400% upside basically. Go up to 25 on that thing. You could you can go higher, or you can, you know, come in tighter. Choice would be yours. But so there you go. That's a potential. If you think this might actually play out and get to that target, yeah, it's the potential's there. Now the other, you know, like I said, if we get below that low, you could stop out, or, you know, add something to play to the downside. If we actually bounce off the roadmap line, it still may pop up there. So playing out to June gives you plenty of time for that to, for any kind of shenanigans to play out. It's possible we come back and retest the breakout too before we can pop up there. So that's possible. That roadmap line will be up there maybe by March. And if you're playing out to June, that'd give you a little time. Maybe not enough time. If this correction lasted out in April, you might run out of time before we could pop up to that level. So June's just a spitball guess at this point. Just thinking. I'm not playing it right now. Just throwing out potentials. Oil still sitting in the consolidation here. Still indecision. That's the resistance. First support, second support. If we can get below both these supports, probably taking a bath down in the low 50s, 250 maybe even 48. That'd be kind of the ideal spot, down around 48, 49. One big fast flush out would look so beautiful. Kind of wrap up this whole correction we've been doing since 2022. That would be really nice on oil. One fast, swift flush out. Wrap it up down there, and then set up the rally. Now, really, ideally, the A right here, the B right here, and that C would look best if we actually tagged even a little lower than 49. Right there. Down around 46, but I'm not trying to be too much of a stickler here. One more nice, quick, speedy flush out down to 50. I think we may truncate this level, and then we could get a spicy retrace back up to about 100. That 618 level up here on oil. That would be pretty crazy. Go from 50 to 100. That'd be really spicy. Gold. Continuing to chug in here. So there's the potential that we just go rip it on higher. All right, this looks like an A, B. This may be an A, B, C playing out right here. Correction on the way down. This more than likely an A. This didn't really have any three-wave structure, so this may be the first move up, the second move, and then we may be looking at a third move, and it could take us right back near the top, actually, based on the proportions here. This is going to be very treacherous, is what how I would put it, I guess, for the coming days on gold. This could push us up here, and if we got an extension, right up near the prior high. But then set us up for a repeat of that flush out. And it's probably going to be faster than this flush out. Be very careful here. This, yeah, we get near that 5,400 on gold. It's time to be very cautious. Easily come right down here. 4,000. Easily. So be careful. Playing small time frames, you know, the weekly trade and stuff like that. Anything can happen. Playing longer term holds, watch out till we get the bigger flush out. Bitcoin. That looks like the candle I was talking about I needed. That right there on this hourly chart. Looks like the kind of candle I was looking for. Looking back on the daily chart. Don't really have a big doji candle, but if this is a bullish engulfing candle right here, that was probably the bottom for now. Even though we went a little deeper, this path I kind of outlined earlier in the week, probably still what's going to be happening and crapping for. Let's pop back over and grab it out of my Discord. Pop it back up. I think I'm 90% sure I closed it. Come on now. It's this chart right here. I went through it on Tuesday, I think it was. Bottoming out in here, probably going to rally back, and then we'll embark on a bigger flush out. And that'll probably happen by October. So this potential rally we're doing right now probably lasts through May, June, maybe into July timeframe. It's just my best guess. I don't have a crystal ball, just got a bag of unicorn dust, remember. But yeah, that's kind of what I thought right there. So be careful. Opportunity to sell some puts on IBIT. Ride this back up. That was my ideal spot. We went a little deeper. No big deal. We hit the 1272. Surprise, surprise. Surprise, surprise. Anyway, nothing really shocks me price-wise. I expected a flush. I made 300% on the drop. You know, this was the indicator right there. That price action right there was the indicator we're going to do this. Made 300%. I got out right here. It wouldn't have really made much more if I had held on to it. So, beautiful trade. Now, looking for this rally back up in here. Guess I need to pull this fib line down here. Doesn't really change the numbers hugely, but it does bring the ideal resistance down to 95 instead of 100. We can still get up in the 110 area, but that ideal resistance is that we should go up and hit is now at 95. Then watch out below. Probably going down to somewhere in the $30,000 to $50,000 area. Hate to break it to you, but that's what we got cooking. That's what we got cooking. All right. Let's see. There we go. And let's see. Let's do a poll. Let's see what everybody thinks. You think the bottom's in for now? And don't take my word for it. Let's just see what you all think. Like, what's your gut? Think we're going on down now? Or do you think we've got the bottom for now? Let's see how much people have gotten bummed out on Bitcoin. Ethereum got down to, it can bounce from here too. It's, you know, holding a higher low. This is a little bit different chart here. And let's take a look at something else here too. Total. Oh man, look at that. Beautiful. So this 1, 2, 3, 4, 5. Beautiful. Perfect proportions. Looking for this to retrace. Man, that's a good one right there. So watch for this to come back up into this zone. 3 trillion. I would expect the rally for a little bit here. That's 5 down. 5 down. And lower low. Nice. It all potentially completed. So those are all potentially complete on the market cap of crypto. Bitcoin Gold flushed on down, 13. Haven't been down here since 23. And BTC.D Still holding up, potentially bullish. Interesting. All right, back to dollar index. Turning back down again. Dollar dropping on out. We got right to the limit here yesterday. Right to the limit. Didn't like that candle close above there, but corrections can still be sloppy. Makes it less likely we're going on down, but it's still a possibility. So probably 50-50 at this point right now. 50-50. Higher or lower? Flip a coin. I still give this the potential since we're under the roadmap line, but this price action is a little bit 50-50. If we break through the roadmap line, it's probably the end of the correction. As long as we're under the roadmap line, still have, still slightly biased for going down. But this price action has now given it kind of 50-50 whether we're going on up in that or breaking on down right now. In Japanese yen and Japanese stock markets, probably cruising on up here. Setting up the rally. Man, we're basically at 56. 60 is the next target up here. Should put upward pressure on U.S. markets. So Apple, as I've talked about, this is like the sleeper trade for. They are selling a crap ton of Mac Minis. They're starting to be sold out at Amazon. If you don't know this story, AI agents, OpenClaw. People are buying Mac Minis, using Anthropic's Claude to run them. Mac Studios, the expensive version. These are the cheaper version. You can get in for like $550 on Amazon. If you buy a Mac Studio, which I did, which will be here next Wednesday, so Thursday when I get home from the trip, I'll be able to deploy this thing. I bought a Studio, and they're starting to be on back order. So this is going to be like as long as this OpenClaw stuff keeps going, demand skyrocketing for these Macs. It's going to be the sleeper thing that nobody predicted, that like huge demand for Macs. They can run these AI models. If you buy a Studio, you can run your own local AI model and not subscribe from Anthropic or OpenAI or, Google or any of the other ones. And, some people are like, what does that even mean? There's tutorials on the internet for it. I posted a video in Discord for the All Access members, the Termite Training Lab members, earlier the week, kind of describing how to think about this. This is kind of like buying your own employee. And if you pay $550 on Amazon and buy a Mac Mini, you buy a Mini, you have to kind of pay one of the big large language model suppliers for the brains. But if you buy like a Mac Studio, which a lot of companies are actually doing, if you have the money to buy the Studio, quite a bit more expensive because they're like $3,800 for the base model, and it's like $10K for the one with all the juice. I bought this model. I thought it was plenty big enough to do what I'm doing. But if you want all the juice, all the 512 megs of memory and all that junk, $10K. If you're selling thousands of those, that's a boost to Apple. So sleeper trade here on Apple. And this is like hiring employees, and 10K is the cost. Like there's no reoccurring extra cost. Like 10K is it. You can run open models and stuff like that, and it doesn't cost you more. Think about that. You're replacing somebody that you pay $60,000, $70,000, $80,000 a year with something you bought for 10K. This is a potential big game changer in a lot of business. I'm buying one. I was like, shoot. Somebody's like, well, how do you justify $3,800? I was like, I've tried to hire an assistant. There's no way I can hire an assistant and pay him $3,800. Like, I pay him $3,800 in a couple months. I was like, 38. If it just helps me a little bit, like that pays for itself quickly. So I've tried to hire an assistant too. Most people aren't interested in helping do this thing I do. Amazon, unfortunately, The warning sign with the lower highs played out almost right down to the target. Now we're looking for this to bounce. AMZU, definitely underwater right now. Google, this actually looks like we back tested the prior fib line. So 385 next upside. Meta, coming down to that 618 retrace. Want it to hold here. So far, yesterday we held. If we can hold this, get back higher. It's good. It's the warning sign, though, if we start breaking down below 640. Warning sign, this might fail. Seen it before. It's happened before. Microsoft pushing on lower. Look for this to hold down here at 380. NVIDIA, so far, yesterday closed under the roadmap line. This is a warning. Warning, warning. If this turns back sour, we're coming down to 150. AMD satisfied the target. Look at that. Lower low. This is it. This is time. If you want to get long AMD, this is it. Right here. This is the opportunity. 4 to 600 is the upside target. This is it. You got it. Right now. Netflix. I guess Tesla. Tesla holding on to the roadmap line. That's good. As long as we can do it. Upside, baby. This is, that's the dip. I mentioned we may see a dip and rip off of earnings. There's the dip. Now we need the rip. That's, it's good to go. Netflix. Yeah. Be careful. This is sitting down below support. Bottom of the box. We didn't just pop back into it. As long as we're hanging out here, probably going down to 60 to 70 zone down in here. That's only like 10 to 20 bucks lower only. So I go pull the gainers, things moving up, $2 more in the pre-market, put them on the gainers list. I mean, there were like 200 of these. I go pull the decliners, things moving down, $2 more in the pre-markets. Hunt for some opportunities, but I also bring some setups. Yesterday, my setups finder failed on me. Today, I have some setups. Kind of scan through here, look for a couple things that might be interesting. Zoom was popping. They're probably coming down the roadmap line. MP probably coming. This might take another spill down here on MP. STRD. Let's see. MSTR. That could be the bottom on strategy. So that was the extension target. We got it. Watch for a swift bounce here. Their earnings yesterday, bloodbath. Absolutely. I mean, look, estimated lose 8 cents. Actual lost $43 a share. Yikes. Mostly on the back of Bitcoin taking a absolute punch in the face. STRC may be the way to play this in a bigger way. It's already popping back up here. Man, somebody bought a crap ton of that. If you buy it in before next Wednesday, you should be able to collect the 93-cent dividend on STRC. PALL. Almost down to the roadmap line. Be careful here if you buy into PALL. It may take a trip down here before we go ripping off this. I've said Palladium may be the big catcher upper trade of the year, but in the small time frame, we may see a retrace before we go ripping up here. ALB, big player in lithium right now. Took a little while for it to get going. Now might be on the path to 600 to 1,000 might be the upside path there. Infinal, back to the roadmap line. That's a beautiful potential here. This is data center play stuff. It's one of the untalked about heroes of data centers and stuff, kind of like Owens Corningware. 173 for the next one. Corning. It was Owens Corning. Now it's just Corning Incorporated. Yeah, that didn't even pull back at all. So this one, rock and roll, baby. Let's go look at the setups. Let's see if there's anything spicy in here. That's a downtrend, but this could be a reversal with the higher low. High low. Apollo. It did kick off Apollo. 51.38 upside. 46.73. One. It's just a normal ticker right there. AMB. I don't like that one. New York Times. This kicked off. Look at that fast retrace right there. There was another media outlet reporting they were having problems. I'm sure New York Times sold off. In sympathy, 76.52 upside, 31.80, 1.9. This is historically, this is a stock that trends, pulls back, and continues higher. Pretty nice. PNTG. This one played out a couple months ago. Here we are again with another pullback. Here's the high. Here's the low. Entry, 32.79 target. Stop is always dollar below the low on these. Whatever the low is, it's dollar below the low. That's the stop. So lower price stuff, it's a bigger percentage stop. Higher price stuff, smaller percentage stop. It's just the way it works, though. I've tried all different stops on different ways, and that just universally works. So, and there we go. 20 on the upside right there. 1693, 11. That's a pretty nice one, even though 16 is only half of a statistical population. It takes 30 trades to be a statistical population. So these, take them with a grain of salt. You could flip a coin 16 times in a row. While it'd be somewhat rare, it can still work. And you could still get 15 out of 16 of those being heads. So be careful. We'll also see, Amazon was another one that was one of these, and it failed right there. This one was really spicy. Now we have 2 losses, and our profit 92% out of 25 trades. So failed. Bummer. Moving on down the list. Big list. SBRA. I already talked about that one. Potential right there. 20 on the upside. Although stop. Dollar below the low. Down at 16.80. Be careful. It's a sizable stop. VIKB. There's the high. There's the low. Almost to the target already. I'd probably skip that one. And let's go ahead and talk about the potential for the day. For those of you still here, make sure you, if you find this content beneficial, let me know. Feedback. If you, phone a friend. Send a link to somebody you think would find this helpful, beneficial. And we're going to dive into a little bit more sketchy stuff here. We're going to look at the options pressure. And I just deleted the line. I'm trying to delete the bubble, which the bubble won't even select. That's awesome. I love that. All right. So gamma range, what does this even mean? I go pull on bullflow.io, which I might have closed. Cool. Where did you go? Bullflow.io. All right. Where is it? Where is it? Where is it? Where is it? There it is. Found you. All right. I have QQQs up. Let's switch over to SPY. If you want to get bullflow.io, it's the cheapest gamma tool I found out there. Links in the description. I get a little cheese off of it if you use my link. Not big cheese, but a little cheese. Big level right here. We're sitting at 684. Big levels down here at 680. So that's some down pressure right now. But that's not necessarily, we're not necessarily going to pin there. A lot of people think that we're going to pin on the biggest level. That's not necessarily the way this works. I've watched gamma for a lot of years, not with Bullflow. I've only had that since December. Just kind of ran across it on social media. And what I like to do in here, though, is look at where the big levels are, especially on an OPEX day like today. Today's a weekly OPEX. Every day is an OPEX, but the weekly OPEX is still where the big numbers are. So we've got big numbers, all the way down here today to 250 million right down here at 670, and we got a big number up here at 690. So that's a $20 range right now. Still got some pressure up here, 691, but I'm gonna go with those bigger levels. That 1.2 billion, that's pretty. It's the biggest level we've seen all week right now, especially this early in the day. So up to 690, down to 670, expanding the range just a little bit. This is probably the zone we're gonna play in today. So that's the red box. That's the potential zone. That's a bit more to the downside. We're under the 15-minute roadmap line on SPY. That's downward pressure. We could go to the bottom of the box. We've seen that the last couple of days. Now, how do you figure out where we're going to kind of hang out for the day? For that, I go to levels and start looking at this. Now, calls are on the yellow on bullflow.io. Purple is the puts. Right now, looking at this, got to zoom this out. Here's our expiration today. There are more puts than calls. Downward pressure. People trying to make money on the put side. So actually, the way I find this works, you don't pay attention to like where's the max Gex, where's the max pain. If you go look at a max pain website, they're going to give you like probably the 680 level. But I look at it a little bit more artistically, I guess you might say. You look at the whole chunk of calls as one big chunk, and you kind of have to, where's the average point? There's a long tail, so it's kind of like right up in here, right? That's where the most exposure for calls is somewhere right in here. You could be right in there, and you just kind of zero out the most money. Then you look at the puts. Now, where could I be and kind of zero out the puts? With these big levels in here, it's probably somewhere right about there. You kind of, then there's a big chunk of calls that just happened and just kind of blew the whole thing out of the water right there. Somebody just bought a large chunk of calls. This is why it's variable too. So somewhere around 683 is going to screw those call buyers and going to screw these put buyers. And let's see what that just did on the heat map. That big chunk of calls that just went through. Yeah. Changed it around a little bit. I'm going to say 683 is still the level we might pin at, which is, moving the box. I want to move the line, not the box. So 683 right there. That's where I'm going to guess we hang out today. So even if we take a trip to the top, we may come back down, or we take a trip down, we may come back up. That's it for SPY right there. That's what I'm kind of expecting. Now, QQQ, this is where I play. I play in the NASDAQ futures, or not futures, but NASDAQ index every day. If you didn't know, I posted on X, and I take a daily trade in there and make a little bit of cheese. That's, yeah, you see it right here. Do these trades every day. They're not really little trades either. Risking $65,000 to bring in. Yesterday I made like 800 bucks. Not bad, but I have no losses in almost 80 consecutive trading days. So 4 months of doing this. I haven't taken a loss. That's almost doubled my risk money. It's pretty darn good, I think. Now, gamma level for Qs. Jumping back over here. Jump back to the Qs. Maybe I should have just started there. Pull up the heat map. Big level down at 600. 590. 700 million, 600 million. We're probably going to hang around right there. That's what I'm going to guess. But I'm going to draw my level all the way up to 611. and down to that 590. So on the upside, 611. Have potential to go up there. Down to 590, which is a little bit lower. A little bit of expansion on Qs. We're definitely way under the roadmap line on the 15-minute here for Qs. Haven't even bothered trying to test it. And then looking at the levels, back to zooming out, looking at it. No, big put players, no big call players at all. That's going to put the level up here around, probably around 609 to kind of balance this out. So we got some upward pressure on Qs to screw everybody. I don't know that we're going to go up there and do that, but that would be where it screwed the most put players. Looks like the S&P has the bigger, much bigger gamma. Now we could go hang out at 600 and screw those. I mean, just think about it. Anything above 600 screws those put players. So you'd screw these put players and these put players if you came up to 610. And that'd pretty much wipe the board. And you'd screw all these call players down here too. So may have some upward pressure to the top of the box on Qs today. Doesn't have to. I mean, the overwhelming downward sell pressure could just take over and we cruise on down. So be careful out there today. And like I said, next week I'll be traveling. I'll do my best to provide the content that I normally do. No guarantees. I'll do it the best I can. So have a great weekend. Thanks for being here. And it looks like almost 50-50 on the Bitcoin. That's good to see. Really like that. Really like that 50-50. That means I'm selling puts. People are sufficiently bummed out. So have a great day, everybody. I'll see you again, hopefully next week. If, Monday, Tuesday, Wednesday, try to be here. And if, whatever happens, then I'll be back Thursday for sure. If, my laptop just takes a dump or whatever. And we'll see you.